Yeah, so hello and good afternoon. I welcome you to today's special webinar here, exclusively for JFD brokers, how to trade the market opening of the US markets like a pro. Just 1 second, I just want to have a look here. If everyone can hear me, but usually this shouldn't be such a problem here. US markets like a pro. Yeah, that's perfect. Okay. So yeah, I welcome you, and it's great to be here, especially today. So currently, I mean the headline of this event here is obvious. So we want to trade or respectively have a look at least, and then trade with a proven profitable trading strategy here, the US market opening. Even though right now markets, especially Euro USD, is going crazily volatile here, mainly due to the fact that we have right now the ECB and Mario Draghi speaking here. So first of all, here, this is my Twitter account, so you can follow me here at Jens Klatt FX. If you have any questions, just shoot them over here, or contact me via email or so. Why we are here right now is because we want to just have a look at what was communicated so far. So everything in terms of rates is unchanged. We see the comment from the ECB. This, by the way, from the statement. That there's nothing which Mario Draghi mentioned or something, but it's the statement from the ECB, which was already published at 11:45 p.m. here. GMT. So the ECB sees QE running until the end of December or beyond if needed. And they keep on buying bonds here. I think it's 60 billion. It's 60 billion a month at this pace. And the ECB sees rates at present level well past end of QE. The ECB QE to run until inflation path has sustainably adjusted. I think this is the most interesting note here in all. We will have a look at the Euro USD in a few seconds here, but I can tell you here right now that this is super dovish, in my personal opinion. And especially if you look now at the Euro USD, you won't believe this, since the Euro is trading again above 120 and probably even attacking and not just attacking, but also moving above the current yearly highs here, probably pushing above 121 today. That's something here. This is a German statement from me. Statement as all in all dovish, but nevertheless, Euro USD has been stable after this was published. And there's also here the statement. That's, by the way, the only one I retweeted here from the press conference so far, because everything else just, yeah, it was already said here in the statement itself, my personal opinion. It says that Draghi says this autumn will decide on calibration of policy beyond this year. I was very sure that they will give a statement today at the September meeting, but in fact, the autumn is starting here in 2 weeks, I think. So if you look at the calendar, it's technically speaking, autumn will start in 2 weeks, and so, well, so far we're still in summer, and so they don't need to talk about this. All in all, my personal take from this my personal take from the press conference with Mario Draghi is, it was really disappointing. He somehow seemed a little bored or something. I don't know what to make out of this. I mean, I don't expect the ECB president to go completely berserk here and going crazy, but all in all, I somehow expect some more, I don't know, drive in his speech or something like that. Okay, but that's just a personal thing here. Let's have a look at what's going on in the Euro USD, and probably that makes even more sense. Just let me give you here my current account. And as you can see already, I have a position going, but this is not ECB's position. This is a position I'm trading automated here for my clients. And currently, what you can see here, it's a DAX long position, by the way. What you can see here with the DAX being long is that the DAX was already trading significantly higher over the day. So the DAX already pushed towards 12,400 points and topped out here. The exit management of this position. Now you might wonder, why is he looking at the 5-minute chart? I am I already put my stop here, trade my stop to break even where I started the position. But usually this position is hold over the whole trading day. So I'm not taking out the the position before the end of the day. Especially not today. We'll have a look at the DAX here and why I'm very confident. I mean, look at the daily chart and you can see it yourself, 12,300. This is the key level, and we made it above this level. And I wouldn't be surprised to see the DAX pushing higher, probably up to 12,500 into the weekly close here. And that's one good reason to stay long here. And as you can see here, it was close. It was a close one. It was 13 points, but right now the market seems to push higher again. And now let's come back to the euro. That's, I mean, the main reason why the DAX is pushing higher is obviously because now the momentum is somehow diminishing here in the euro. And the euro, well, the thing is, I've prepared everything here. Look at this. I've already included here in the mini terminal of JFD. This is from the MetaTrader 4 Plus. This is an add-on. You can download it for free from the website. And if you're trading via JFD brokers, you can use this. It's not just this mini terminal you can use here, but it's also several other experts you can download here. So you can, for example, stealth orders, and you have a correlation matrix and all this stuff. But we want here, because it's a live trading event, respectively, it's market opening live trading. We want to focus here on the mini terminal, and the main tool I'm using here when trading here intraday and discretionary with the JFD MetaTrader. I'm nearly always and only using this mini terminal here. Okay, and so you can prepare everything already here. So usually I'm not a big fan of just clicking into the chart and do this one-click trading. So this is usually not my trading style. So what you can already see here, it's not just that I say that, but I do that. I mean, this is automated. It's an automated strategy. I have a clear entry signal, and I clearly know how to manage the trade and what to do every time. I think this is main and a key for long-term profitability in trading in general. And so I'm not a big friend of now looking at the chart and really just clicking into it. And this is the special thing about today, especially here around ECB, you can't really say where the market will probably top out. And now the next question which may arise here is, why am I talking about shorts? I mean, the market is obviously heavily long here, pushing higher and pushing above 120. So why do I consider short engagements here in this current market environment? This has one big reason. So first of all, Mario Draghi already mentioned this, but he mentioned it already. Nevertheless, the market is not getting the message so far. You get the feeling that he doesn't get the message. That the ECB, the current exchange rate of the euro, really puts the inflation target of the ECB in danger. This said, that means nothing more than, okay, the ECB is probably willing to somehow push the euro lower, even though he didn't say that. I mean, there's lots of trouble right now connected to let's call it manipulate the exchange rate here. Remember the words from Donald Trump here, and was very clear about that. It was not just China he attacked here regarding the exchange rate manipulation, but it was also the ECB, respectively the Eurozone, and here especially the Germans. He attacked, and where he said, well, the Germans profit enormously from the current exchange rate here. So, and this said, it means that I could imagine that there is some pressure from political landscape right here, and Mario Draghi, especially the ECB, wants to avoid going into I'm not necessarily saying fight, but risking some consequences probably in terms of trading with each other, with the US. And so nevertheless, if I somehow read between the lines that the ECB doesn't like this high exchange rate. I mean, okay, he mentioned, that was a few minutes ago, he mentioned, okay, if the ECB, I'm sorry, the Eurozone is on a good track here to recover. I mean, usually what goes hand in hand with this is simple currency, an exchange rate rising in value. So it's no big surprise that this happens, even though the ECB made clear that this also puts the inflation target in danger. And if I combine this here with the current positioning of the market participants in the Euro FX future here, so in the commitment of traders report, where we can see that we are currently at the highest levels long positioned here since the invention, or since the euro went live here at the end of or at the beginning of 1998. We can clearly say that there's just one impulse the market seems to need here to result in kind of this sentiment extreme being loosened up, let's say, or that market participants who are currently aggressively net long the euro, and I mean we're only talking about the euro future, still we have only just 6 to 10% of the daily average trading volume being traded on the CME here in the euro future. So there's plenty of room on the upside here, and you can just imagine how big the current long position from different CTAs, hedge fund managers, money managers, institutionals in general seems to be. They are currently, this is the green line here, they're currently long 90,000 contracts. So you have to multiply these 90,000 contracts with 125,000. This is the value of one FX future here, and you get a number of 11.25 billion market participants are currently net long. And again, this is just 6 to 10%. Let's say take the middle here. It's 8% of the overall trading volume in the market. So not taking into account everything going decentralized here, respectively OTC. So the market is currently aggressively long the euro. And now what we only need is some trigger event. Even more interesting to see that Draghi is kind of really, to me, really, he makes a super dovish impression here, but the market is not making anything out of this. So as long as we trade above the lows here from this choppy price action around 12:30 p.m. when the press conference here started, as long as we trade above 1930, 1910, these are the current daily lows here, I wouldn't really like short positions here. So, but I have to admit, before we started this event here, I was sitting in front of the screen, was just thinking, well, let's already say, okay, I'm willing to short 5 lots, stop loss 60 pips away, but somewhere here. On the other hand, you just say, okay, but as long as we trade above the current lows here from this price action, don't take any shorts. It's just not working out well necessarily. What do I mean by that? Well, it happened too often in the past when I traded such events here that you take the risk here. For example, let's just throw in a number here. Let's say 120.40 or something, and you decide to short the market there. So you're not putting in any limits or something, but you're just going short, purely discretionary here, and based on the price action showing that the market is losing its steam on the upside. So then I have a trading rule I live by, and in the morning, by the way, I had the DAX long or short. So I made a setup in the DAX, a topic which, oh, by the way, one second, I have to copy paste it again. So now I remember. But the main reason I did that was because I just wanted to have a clean desk here. But and that's why I closed the window I used in the morning. But 1 second, please. I'll just see if I can find the setup in the morning. This setup was already stopped out here, and I can show you. I can show you what happened there, and you can see kind of my trading style I live by. So I made the open range a topic in the DAX. I'll show you the chart a little later, so not necessarily now. And I said, well, we go long with 297. We place our stop here at 263. It's 35 points risk, and I'm working without a take profit here, but working with 350 on the upside as a potential target to be capable of calculating a risk reward here which was 1 to 1.6. And this is something which is probably interesting for you. It's a hit rate. It's 42%. And currently, what I can already say, I haven't published it yet on my website, but I was working on a document in German here, but I already translated it into English, haven't published it yet. So if you're interested in getting this document here in English, just shoot me an email. And I'll give you the document which is around these numbers I just present to you in terms of the hit rate. So you can see there's a German website, but here, for example, you can see already there is some English content. For example, it's on my online course I'm offering here, but also here's the DAX strategy. And I have to put this website here in English, and here is a PDF. And with this PDF, by the way, it's a German PDF, but I have it already in English. So the thing is that you can see here some ideas on how to use this guide. It's not just here's the strategy, just trade the strategy, but it makes sense to have a clear trading routine you live by, for example. And here, for example, this is the summary of the back test I ran here with this strategy. I was just presenting here in this webinar in the morning in DAX long or short. And by the way, here, so here's the email address, jklatt at jk-trading.com. And so you will get here the number of 42%. You can see it here. It's the winning trades is 42%, and this is where I got this hit rate from here. And so what I did was to show that the setup itself was an, let's call it, intelligent bet. I calculated the expected value of this setup I just presented to the audience there. And it's 42% multiplied with 1.6. This is the potential chance on the upside. And then you just subtract here the 58% multiplied with 1. And you can see that on average, you're making with this setup 9 cents per every euro you risk, or USD or whatever. That's, by the way, something we will go a little, and we will see a little more detailed in a few minutes here in terms of the US market opening, where we'll formulate a setup based on a similar strategy here with some slightly changed parameters and optimized parameters for the US market opening, but where you can also see how important it is to have a clear plan. And that's, by the way, also one of the reasons, by the way, why I'm so, I mean, really, you can believe me, I really was about to just short this spike here higher. Probably I would have seen some losses, but right here I'd be I wouldn't call it comfortably, but at least my trade so far would show a profit here. But, and this is the thing, this market environment here and going discretionary short without having a clear game plan makes things really uncomfortable for me. Really, what I just can't stand is let's put this in quotation marks, but I mean, clearly I know what to do. I'm in this business for over 10 years, but nevertheless, I really feel way more comfortable to have a clear plan and know right from the beginning where to place the entry, where to place the stop. And when the market does, for example, earn 1R here, then what I have to do with my stop, like here in the morning, the market moved 34 points in my direction. I trailed the stop to break even, for example. So I moved the stop then to 298, for example. And knowing exactly every step and having a clear routine is what in the long term will give you a tremendous edge in your trading. But in this case, for example, here, in terms of the euro and what the euro did so far, I don't have this edge, or I just don't feel comfortable in doing that. And that's one of the reasons why I step back from going short here. And on top of that, somehow I'm already euro short if you take into account the current correlation, negative correlation here, DAX to the euro. That said means, I mean, if the euro really drops now, and say we move to 119.50, or we push directly and significantly below 120 again, we should expect the DAX here to probably keep on moving higher and probably attack the region here around those highs from the morning again. And so right now I'm fine. I have to say, by the way, I have to admit here that I expected some more volatility in the market. I mean, you might have seen the euro spiking up, spiking down, and everything here. But all in all, it's still not that exciting, let's call it, or I just expected more. That's all I want to say. I just expected more, and somehow we probably see now a very choppy market action to continue here in the euro, and I definitely and I favor short engagements only and only if we one day drop below 116.70, 117 here. So this below this relative low. Everything above this is should be considered bullish here, and it's definitely nothing very attractive for short engagements. Probably there will be some chances then on the short side. Probably now the market will sell below 120 again, and then into the weekly close, for example, we see that the euro has some trouble with those comments from Mario Draghi here, is interpreting them as dovish, and then there's some pressure building on the euro probably, and this could lead to some intraday short engagements. But always be aware that the overall advantage, even though the current or the statement from the ECB today and from Mario Draghi sounded really dovish in my personal opinion, so there was no mentioning of what to expect post December 2017, a clear plan on how they plan to reduce their asset purchases, like saying, okay, we'll just buy 40 billion worth in bonds per month from, let's say, January till June, and then from June till September we'll buy another 20 billion per month, and then from September till December 10, and then from January 2019 onwards we won't buy any bonds anymore, and we're done with our QE program. But instead they just said, hey, if inflation doesn't pick up, well, we keep on buying bonds, gentlemen, ladies and gentlemen. And this is super dovish in my personal opinion, and that the euro can stabilize here around and above now 119, respectively 120 here is surprising. It's really surprising, and this is the moment when you should say, okay, well, just listen to what the market tells you. And the market is telling you short is right now not an option, even though we're probably now topping out a little and the market does not make it above 120.70, the current region around the current yearly highs. But even though, if the market was really weak, we would have seen this already, and the euro really dropping aggressively. So now let's come back here to the DAX, and then switch over to the US market opening. So first of all, the thing here around my outlook, or let's first of all look here at the daily chart, so we can see how significant this is. In my online trading course, by the way, what we got to see here with this spike above 12,300, I call this an interrupter so far. So some might say, from a market technique or a market structure perspective, they might say, well, now the downtrend is broken. So usually you do the following: you define a downtrend with a sequence of falling highs and falling lows. That's what you usually do. So let's do this here, and it's very rough. It's like this. This is what you call the downtrend: falling highs, falling lows. And the moment the market starts to do this here, you say, hey, well, that's where the downtrend is broken. But the thing is, there have been plenty of occasions in the past that the market did exactly that here, spiking above that. It doesn't matter how long this is, by the way. So, or that's not right. So probably there might be trading approaches where some might say, hey, if we push here, like, I don't know, 30%, and now we take the current valuation, let's say in the DAX 12,000 points here, 30% is something like 400 points. If we push 400 points above this level, we should, even though there's not a sequence of rising highs and rising lows here, we should consider the structure to be broken. Then that's something you can do. But all in all, let's just say we haven't done this here. So 30%, but the market just spiked above that and then just is doing that. So would you consider this to be a trend? Would you consider the trend to be broken here? Or was it just an interrupter, what I just said? And this is the thing. So, so far, this downward structure wasn't broken yet. But, and this is the thing, but the market is, and this is the other thing, the DAX is really, really strong yesterday, but also today. So that's the other side of the coin here. Don't underestimate the current strength of the DAX here. Could be that there will be enormous run into the weekly close here. And I'm right now, even though it's close, and even though one might say, hey, just look at this. I mean, you just lost nearly 80%, 80 points here from the current highs. Isn't that frustrating? Yes, I mean, yes, it's frustrating. On the other hand, I have to say, well, It's a system trade. So and systems are there. They have clear rules, predefined rules. You follow them. It's just like the same here when trading like this setup here for the open range, or the setup I will just present for the S&P here. You have a clear set of rules and just follow the rules. I mean, clearly, I mean, would have been great and awesome to just take out the position here somewhere around the highs, but this is not realistic. It has nothing to do with trading, and by the way, it has nothing to do with profitability in trading, since even though you might make a good call here, in the long run, this could be a decision, a so-called decision, which is then minus EV. It's a decision which will cost you money in the long run. Not necessarily meaning that you're losing with your approach, or it's unprofitable, but it's unprofitable in terms of the overall approach you might trade. And yeah, so that said, let's come back here to this current situation in DAX. I'm still very comfortable, and let's just see what the U.S. markets deliver today. I have to say that. I mean, I'm long the DAX, and I see the positive correlation here from the DAX to the U.S. equities, meaning I expect the DAX to run on the upside if, for example, the S&P or the Dow Jones are strong too. But this, by the way, remember that 10 minutes from now, I will probably formulate a short setup for the S&P. I don't even know whether it will be a long or short setup, but it will be purely system based. But it could be that I hope here that the DAX will rise, even though I formulate a short setup then for the S&P, because the system says so. But let's come back here to the overall picture, and this move higher here. So if the euro now pushes lower, below 119 and again at 120, and remember, the DAX is still in the green for the day. We know about the negative correlation from the DAX to the euro, and well, what do we have to say? I mean, this is very strong. If you look at where the DAX traded the last time, it was trading here around the euro was trading around 120. 121 nearly. The DAX attacked the region here. That was at the end of August. We attacked a very significant support on the downside, 11,900 points, and now it's trading 400 points higher, and it can easily stabilize there. So this is really strong. Then we have also such a so-called power candle here, which is usually retail traders tend to fade such moves. So usually retail traders say, well, you know what? I think, and this is usually what happened in the morning. That's, by the way, also something I read in my trading chat box. I'm running in German, but also something I was thinking about myself. By the way, it was just like, well, it's a strong resistance here, right? It's very strong resist on the upside, 12,300 points, 350. This is the region around the August highs. And now you see a candle, and the market moved 200, 250 pips, or in this case, points yesterday. So what do you think? I mean, retail traders usually fade this move. They usually say, well, you know what? I position myself short against this region because after such an extension on the upside, I don't expect the market to rise another, let's say, 200 points or 100 points. Just say 100 points here. But I expect the market to really find strong resist here in this region. And so what you can see then in the morning was that I completely ignored this. And I just thought, well, first of all, we have the ECB around the corner. And this is even more significant. The market was capable of stabilizing at a quite elevated level here without big problems. So the market pushed higher yesterday for whatever reason. I'm still I'm a little irritated why the market did that. All I can say is I had a system trade running. It was long, and I was happy. That was all I can say, and that's all what counts in the end. So what you have to do then is to manage the trade and to try to optimize the expected value here. And so what we could see is that the market rose aggressively here, but there was no real intention to push lower. But instead, the market pushed to former highs here, found support there, and then here, that was around 9 a.m. GMT, the market just pushed above 11,300 points and did exactly what I already formulated here, pushed those 34 points and higher. Was capable of moving my stop towards break even and hoping. That's also something I mentioned in the morning. Then in the DAX long was short. I was hoping that the market here will keep on taking momentum here on the upside and pushing above 12,400 points, which unfortunately didn't happen here. And this is the thing, it's another approach, as you might have seen already. So this setup was stopped out here with this push towards this breakout level where we placed our stop. Some probably might have moved the stop higher. Some might have said, I'm taking profits here at 350 as suggested with this setup. All of them, or both of them, coming out well ahead on this trade. And yeah, the others might have, let's call it, gambled. It's not negatively correlated here, this word, but it's they might have said, well, let's just see whether the market can push higher from here on a dovish Draghi. Unfortunately, the euro right now is not doing that, but probably this is exactly why the euro, the DAX is stabilizing here. Probably market participants read exactly that between the lines. Probably they really understand the statement as dovish, but the DAX right now can't profit from it since the euro is reacting surprisingly, okay, but nevertheless is reacting quite strong to this statement here. So now it depends on the U.S. markets, just opened here. And so let's now come to the U.S. markets and then just see where the market is trading. Let's say here in the Dow Jones first, and then we'll have a look at the S&P. So right now, first of all, I consider this to be a bullish breakout. That's the first thing I'd like to say. You can see here that I'm working with the bull flag. Which I see here, and with the breakout out of this, I consider a test at least of the highs here around the current all-time highs at 22,200 points here to be a good chance. It's something we definitely should take into account here, and also something very interesting. If this is really a bull flag, and that happens several times, and you might have seen this not just in cases of bull flags, but also probably for head shoulder formations and that stuff. The market usually breaks out here and then retesting the trend line, in this case, and on the upside here, retesting it and then taking on momentum from here. And this is something which I also consider to be really interesting, even though right now for the week we are down. So we started already with a gap lower. That was thanks to North Korea and the nuclear H-bomb test here in North Korea over the weekend. And we pushed already lower here on Tuesday too. But the market is stabilizing, and probably that was just technically a retest here. And so far it somehow looks as if the market is probably done with this, yeah, let's call it a massive corrective move here. So I think this is already should be considered here a bear market in the current market conditions. So the VIX is still very low. And yeah, so what we can definitely say is that this looks promising for the bulls, at least looks promising. The picture would completely change once we drop here below 21,600 points. But so far, there's still a very good chance that we take a stint here, or we'll at least try to see another move higher here and see a move towards 22,200 points. And the same is true for the S&P here. I've already prepared the chart for this event here. So, but this is a 50-minute time frame chart. We will just scroll out of the chart here. It's this is the daily chart, and also here you can see it's still bullish market environment. Higher highs, higher lows, clear upside structure. Market topped out here, probably was about to attack the region around the trend support, but instead of attacking the trend support at 2,400 points here, it just moved higher. We didn't make it to new highs so far. This is not a relative low here, but it's a so-called swing low. But nevertheless, as long as we trade above 2,400 points on the daily chart, we should consider the picture to be bullish. So now let's look at the hourly chart. Here the picture is a little difficult. It's more choppy than really bullish, but you can already see here the current region around the so far weekly highs. It's the highs from the 5th of September here. These are the highs from Tuesday with a move above this level, and it's very, I mean, it's a close one, right? We're trading here at right now. Let's just see. It's just like 2,466. It's 477 at 470. So it's 4 points. If we make it above these highs here, it's possible that we move at least 10 points higher, probably also moving towards the current all-time highs here, towards around 2,488 points. So that said, I'd say we have a better chance on the upside than we have on the downside right now, also here in the S&P. So I definitely favor long engagements, but, and this is the thing, it depends on what the system tells us. And for the system, what we need to do is the following. I've already prepared this here, by the way. Oh, I'm sorry. I just have to reopen the slide here. Unfortunately, I closed it already. So here. So one sec. So here it is. And here I've already the so-called ORB setup. It's the open range breakout setup. So the first step, it's just 3 steps. That's, by the way, also something which clearly makes sense for most of you now. If you've heard about professional traders or trading coaches or whatever talking about a duplicable trading setup, it's not just that it needs to be duplicable to get this trading routine here, but it also needs to be as simple as possible to give you a good chance to then run a backtest here, have not that many parameters you can manipulate, and really see whether the trading strategy you're trading is robust. So there are several webinars we held here for JFD, by the way. It was not just me, but I had a co-host, let's say. It was a co-moderator. It was Stefan Friedrichowski. And this guy has a PhD in physics, and he just made this more, let's call it touchable, where he really is very, very quantitative in his approach here. And the thing is that he already not already, but he underlined and emphasized too how important it is to have a robust approach here and not have too many parameters you can, as already said, manipulate here. Because if the strategy in its basic version shows already, and it's a simple strategy, it shows a good and positive result here, it shouldn't change if you let's say, looking at the range, let's say here of, in our case, for this open range breakout setup, it shouldn't change. If you look at the range from 1:30 p.m. till 2:15 p.m. GMT, it shouldn't change that much. If you look at the range between 1:30 and 4, or in this case 2 p.m., so 4, it's German time, or 2:30 p.m. GMT. And in fact, it doesn't, even though this is the optimal time frame. And I'm not that surprised to see this this range here, or this time frame, to be optimal for the strategy. Since if you're looking at the charts for quite a while, and if you're interested in the markets for quite a while and trading the markets, then you can say, well, usually after 45 minutes of trading, at 1 hour at latest, you usually have a direction in which the market wants to go. If the market breaks out to new highs in the first hour of trading, then usually you should follow this momentum here, because the market has a good chance to trade higher over the day. Same thing is true for the downside. By the way, this is also something in terms of the DAX. If you're trading the markets long enough here, and you use this open range breakout setup, probably not necessarily because you want to trade it, but you want to get a better feeling of the market, you can, if you carefully watch this setup over and over again, you can, most of the time, let's say 70 to 80%, you can call whether the market will show you some strength in the big trend developing or not. So nevertheless, the thing is, if you looked at the market, for example, yesterday, so if we now click back here to the DAX once again, and you looked at the price action, which happened so far, you could see, okay, the market was somehow drifting higher, but I didn't expect this move to come here. That's something I have to say. So this is the great thing. So it's unlikely, but it happens. And this is something you have to make sure that you understand this. So there's always the chance that the market will surprise you. That's, by the way, also something you have to remember in terms of placing your stops. You always have to make something in behavioral finance. We call this pre-mortem analysis. So I highly recommend the book to you. One of the best trading books out there, even though most of the people wouldn't even see this as a trading book here. It's Thinking Fast, Thinking Slow from Mr. Daniel Kahneman. So it's a Nobel Prize winner, and it's one of the best books on trading psychology, and you will easily understand why you do things you do and how important it is, for example, to understand that all of us, for example, are or having a problem with loss aversion, for example. So usually, I won't do this now, but the thing is that what I can tell you is that usually you don't enjoy gains as much as you feel pain when losing. That's also something you might wonder about. So let's have a look here at what the DAX currently is doing. Just imagine the market just moved in my direction in the morning. It was great to see that, and it's still great to see that. And I still hope that the market will keep on momentum here. And by the way, Euro USD back below 120. So it's not necessarily the US markets here, but it's the euro doing this, resulting here in some momentum. But now the thing is, so you might have said, hey, great. So in the morning, you just went long and the market moved in your direction, great. And then you see the market dropping here 80 points. But were it really 80 points the market dropped? No, it was 160 points. So you might say, what do you mean? I mean that usually you say that losses create twice as much pain as you feel joy on the other hand when the market is moving your direction. So the market moves 80 points in my direction, great. But if the market moves back, and even if it's just 40 points here, it feels like as if I lost everything on the position I accumulated so far. And this is something which is resulting in the unprofitability of retail traders in general. And that's, by the way, also something which is a big topic in my online course here. So if you're interested, just watch my website. It's jk-trading.com, and then go here to Ausbildung, is German for education, and there you find the online English version, and there you have also an English text here. And trading psychology plays a very, very important role here in this course. And I just want to show you a picture. One second, I haven't prepared this here, but let's just see whether I can. So first of all here, now I have just to see whether I have the slide. Yes, that's perfect. So here, that's this one. It's the average winner, loser in different assets. So I'm looking here at some numbers I have from a third-party broker, big third-party broker, and I'm not mentioning the broker here for discretionary reasons. But the thing is that you can clearly see, if you look carefully, if you watch carefully this chart, you can clearly see what I just mentioned. So for example, Euro USD here, in this time frame, we analyzed over 9 million trades in Euro USD alone. Okay, so and what you can see here, that the average winner in this time frame was around 20 pips, while the average loser was 40 pips. And this is what I just presented to you here in terms of loss aversion, and what I'm talking about in loss aversion here in terms of that you usually have a ratio of 1 to 2 here, and you can clearly see that somehow it varies a little, but all in all, you can see this ratio happening over and over again here. Sometimes very extreme, but all in all, it's very close to 1 to 2. And this is showing, this chart alone is perfectly showing from a real perspective. So we're looking at real trades here, done during 1 year of trading alone. And we look at real numbers, and you can see that this is definitely not just a theory. It's not just theory here, but it's real. And loss aversion is something you really have to get rid of in your trading. You have to understand why this happens, and you have to understand how to cope and how to deal with that. And Kahneman, in his book here, is perfectly explaining why this is. And this is something, if you really want to become profitable in your trading, I highly recommend reading this book here, since this is one of the best books out there on trading, even though some don't understand this. It's also something showing you that, for example, we tend to really think we are capable of calling the direction of the market. Trading is far away from calling the direction of the market, by the way. It's just like thinking in terms of expected value. Also very nice described in this book why this is so difficult. Why is it so difficult to have a trading journal? If I ask here into the round, hey guys, who of you guys is having a trading journal? I bet that there will be plenty out there who would say, yeah, I was thinking about having one, but I don't have one yet. So the question is why? It's a simple reason. It's completely human not to write, or you don't want to write down why you're trading, or what happens in your trading, because you fear that if you write down what's happening in your trading, that this will show you that what you're doing in your trading doesn't work, and that's the reason why you're losing money. So it's like you want to protect yourself here. And this is completely human, but this is something which will cost you in the long run enormous sums of money in your trading, all in all. And if you read this book, and I read this several times, and by the way, it's not just something you read in two days or something. It's over 500 pages here. But I highly recommend reading this book, really, because it perfectly illustrates why you think the way you think. And if you're aware of that, what you can do then is you can start to get rid of this, or you can start to do something I call in my trading psychological area, I call inducing rationality here in your trading. And now let's come back. By the way, it doesn't really matter that I talked a little around this topic now here, since we need to wait another 30 minutes here till this setup is then in play. But here you can also see why a clear game plan and a clear set of rules is so important to have one. So the thing is, by the way, I just forgot this. So we have to identify, first of all, the advantage based on Dow theory in a rough way. This is the long side, and I just presented to you several minutes ago. Or we do this, and this is what we do today. We will use the 10-15-minute EMA, exponential moving average here. So what we do is we look at this exponential moving average on a 50-minute time frame, an aggregation of 10, and then we say if we trade above that, we'll go long. If we trade below that, we'll go short. That's, by the way, also something which now perfectly makes sense when I just said, hey, by the way, I don't even know in which direction I will trade, because the market tells me in which direction. The system is clearly defined, and the market now shows me if I'm trading above this 50-minute EMA here, I'm going long. If I'm trading below that, I'm going short. So I don't even know yet, even though I might have already done a small and very rough analysis here based on Dow theory, or based on the current market structure, which I consider to be or favoring the long side here. So then we define the open range, and there you can see it takes another 25 minutes from now to define this open range. It's 1:30 p.m. till 2:15 p.m. GMT. And then we do the following. You trade the break of the range in direction of the identified advantage. The stop, we place it above or below the high-low of the range, and that's it. And the trade will be closed at, in our case, 7:50 p.m. GMT automatically. What you can also do is you can manage the trade discretionary, but I recommend to just trade the system here and don't do any adaptations so far. But just the first step here to trade this setup is to have a clearly defined plan. Yeah, a plan which gives you clear defined, predefined rules which you have to follow, and don't question them, just trade them. Why don't question them? Well, the thing is, so first of all, let's have a look here at the S&P, and then let's have a look at the at some numbers which will show you that this really works, this setup. So so far we are here trading. By the way, let me just use this one. So far, we are waiting for this range to develop here. So the high of the trading day so far is 2,468.4. The low, 464.8. So it's the SPX open range. So far, what did I say? 464. Here it's, yeah, 64.88. Oh, by the way, it's the other way around, right? So in Germany, we have dots there where in the English-speaking world, we have commas and the other way around. So that's one of the reasons why this looks a little weird here. So that where the dots is, just imagine there to be commas. And then we have here the high currently at 26468.4, yes. So this is the current range here. You can also implement some filters here, like saying, I need a range of at least 5 points. Then, for example, you can't trade the setup today, but you just step back from the setup. But this is something we just take out from our current situation here. So the SPX, it's the open range so far, but we have to wait. So it's possible that over the next 20, 25 minutes, the market will make a more significant low or a more significant high here. And then we just do the following. We decide whether the market is trading above or below the 10. Yeah, the 10 EMA here, the exponential moving average 10 on a 50-minute time frame. So what we're looking here is the 50-minute time frame. And if we're trading long, then we trade. If we're trading above that, we're trading the breakout out of this open range long. So we enter the long position with the break above 2,468.4. We place the stop below the low, which is currently here at 464.88, making it an overall risk. Overall risk of what is that? 3.6 point. But by the way, this is just, I don't like this, to be honest. I tell you something. So I'm having a filter here in there, and my system tells I need at least a range of 5 points, even though one might say, hey, the volatility right now is really, really low. But what I have to say is that 3.5 points is just, it's just too tight. The range is just too tight. We just do this here from a pure technical standpoint to give you a clearer idea of how to formulate a setup based on what I just said. But the thing is, I don't like the range to be too tight, so I need at least 5 points. And on top of that, remember that we are trading CFDs here. So even though the conditions, the trading conditions and commissions from JFD brokers are very attractive, and the spreads are really, really tight, even then, with a spread of 0.3, 0.4 points, it already makes a significant chunk of the overall risk here in terms of percentage. It's percentage wise. It's just. I think there's a chance to have a more attractive setup if the range is a little wider here, especially also in terms of volatility, since a too tight range already suggests that the overall market conditions are not that favorable, let's say, and for strong trends. And then a too wide spread, even though it might look very, very tight already, the spread, but nevertheless, in comparison here, or in the relation to the overall market conditions, it's still favorable to have the potential to see bigger moves here, so that the spread doesn't play such a big role here. But okay, let's just say it's fine. But as already said, I usually trade the open range breakout here with this setup only in case of the range being 5 points minimum. And then the target, first target is, I write this down here, anticipate a break of 2,470, which is very close here. We've seen this on the hourly chart where this comes from. But all in all, the system in fact says close a position at 7:50 p.m. GMT automatically. So wherever it trades there, and if we are not getting stopped out so far, and the market probably moves in our direction, we take out the position here at 7:50 GMT automatically. And this is the setup. And now you might wonder, okay, great, this is the setup, but does it really work? Oh, yes, it does. It does, in fact. So have a look here at these numbers. So the thing is that the system with these parameters was backtested till the year 2010, so 7 years from now, November 2010, 7 years. And during this time span, we made 1,347 trades. You can see here that we have a win rate, a hit rate of 47%, and that the average profit was 1.06. The average loss was 0.82, giving us a payoff ratio, so a ratio of the average gain to the average loss here of 1.3. I'll give these numbers here. 1 sec. Let's put these numbers here. So I call this a POR. It's 1.3 to 1. It's the average, average gain to the average loss. And with a hit rate, I call this, let's do it that way. Hit rate of 47%, you can calculate, 47%, you can calculate here, as we did this already regarding the DAX. And now the cycle closes, you can see how this works with each other here. What I just presented at the beginning, we have the expected value, and we can just copy paste this here and type in the numbers we just got here. So it's 47, 1.6, and this means 1.31. And we have a loss rate here of 52% multiplied with 1. And if we now calculate the expected value, what you get here is this, 10 cents. So you get 10 cents for every euro, USD, whatever you risk here for this setup. So you can see that with these numbers, and if you can stabilize them here, that you will come out ahead over the long run with this setup. And it worked over the last 7 years. It's, again, very simple setup. It's nothing spectacular. You don't need to be a math wizard here or a rocket scientist who had to go to the MIT and study, I don't know, astrophysics, but it's just a clear, defined, predefined setup, predefined rules. You follow them, you type them in. You can easily automate this strategy. It's really simple, and at the end of the day, you will come out ahead. Even though there are some things you have to remember here. That this is where the mental stability, for example, comes into play. Have a look here, for example, at potential drawdowns which happened. I mean, sometimes it takes, or not just drawdowns which happened here. So this is just R's. So it's not relative, it's absolute. But you're losing 20 R here. This is like 20% you're dropping. If the market is moving from 80% plus, I mean, okay, you made just 80% on a, let's say, 100 grand account, and you were ahead with a simple strategy, 80,000, and then you're dropping 20. Fine, okay, not that bad. You still had 60, but nevertheless, if this happens at the beginning of the strategy, you probably won't trust the strategy anymore. This perfectly shows why it's so important to have a clear and very solid backtest here and have a clear idea of what to expect. So it's not coincidence that we're talking about expected value here. So what to expect doesn't necessarily mean that you can expect every trade to be a winner, but instead you can see here that half of the time and more than that you will lose money. But if you have such a solid backtest here, you have something you can trust. Where you will build confidence here, and you just trade the strategy, and in the long run we will come out ahead, even though it will be difficult. I mean, dropping 20% here, or having a time span of, I don't know, how much is this? It's like the beginning of 2015 around here, and then you're making new equity highs and then dropping again, by the way, after 1 year. So being capable of handling this is where really the problem comes in. By the way, here you can see the max drawdown here, 70%. And it's really difficult to handle those emotional swings. But, and this is the thing, no one ever said that trading would be easy and kind of, let's say, a holiday or vacation or something like a wellness trip. But trading is a brutal business. And this is something how I want to close this webinar here. So remember that it takes an enormous amount of time to write down a trading plan, to formulate a profitable trading strategy. You can easily find one here. Look at these numbers. Look at this. I mean, you can easily copy paste that and adapt this and test it not just for the S&P, but test it for every other asset you want. You can adapt this for the currency markets. You can trade the so-called Asia breakout. This is like the time frame between zero. Yeah, it's 0. Yeah, exactly. Yeah, it's 0 a.m. GMT till 6 a.m. GMT, and then trade the breakout. For example, in the Euro USD, you can adapt this here. Find an advantage, define it, the range, Asia breakout range or open range in case of the DAX or in case of the Dow Jones or the S&P or NASDAQ, whatever, and then just trade the breakout of this range here and to backtest this and have a look whether it works or didn't work, and especially run this for a quite long period of time. So don't just say, hey, I'll run this here for the last, let's say, 3 weeks or something, but do this at least for 2, 3, 4 years. And probably even if you get more data, run this for 10 years and look whether it works or not. And yeah, at the end, take into account that the broker choice also has probably a big impact here on the strategy. So for example, look for a broker which is not trading against you, for example. A broker like, I mean JFD brokers, obviously, because they don't have even a market making license. They are a broker which is running a 100% DMA STP model here. True, what is it? True agency model. That's what I was looking for. And just take this into account, and in the long run, you will probably build a picture for you here, which will be perfect with your living situation, which will be perfect with your personality, your character. And if all these things line up, then chances are very high that you will be profitable in your trading. But, and this is something I definitely tell you, it won't be an easy path you can walk here. But with a good, also with a good education, you definitely have a good chance to start through here with your trading. Then the right broker and everything falls in place. And yeah, that's it from my end. So I hope you enjoyed the webinar, and I look forward to hear from you. So if you have any questions, suggestions, whatever, just shoot me a mail here. It's again, jklatt@jk-trading.com. I'd really appreciate to answer your questions. And so happy trading. Watch your stops, and talk to you again then. Next week, I think that will be again around the market opening. We will just see whether we get a setup for today. We'll reformulate a setup. If you have any other assets you want to look at, okay, well then, yeah, then just shoot them over. I'd really like to run a webinar here based on your personal suggestions, which markets you want to look at, and so on. And yeah, that's it from my end. So happy trading. Watch your stops. Talk to you again. Probably already tomorrow, 9:30 a.m. GMT, YouTube channel from JFD Brokers with a morning meeting. I look forward to it. See you, and bye-bye.